Hey everybody, we're joined by Phil Flynn of the Price Group and Fox Business Contributor. We just had ISM come out and it looks like came in at 59.8. They were expecting 60, so pretty much in line. The one mover was actually the prices paid, which is a key inflation component, was lower at 66.9 versus 71.4. Yields are a touch lower on it, really not moving a whole lot on that. But Phil, how's it going? How's your
I'm
weekend?
I'm doing great. I'm doing great. The Chicago Bears kicked some butt here. They look like the '85 Bears. The
Oh,
stock market looks like the 1985 stock market. Everything's going good. I'm telling you, going. Oh, I'm sorry. Oh, yeah, you're a Tampa fan. Sorry about that.
no, not a Tampa fan, but a Dolphin
Okay.
fan, which was a thrashing as well. Though
Oh, I heard.
we
Yeah.
lost the Patriots after being getting off to a 3-0 start, got crushed by the Patriots, so definitely a step back. But
Yeah.
that was some good football over the weekend, and
Yeah.
like you said, we're picking up the month here. S&P's up 20, Nasdaq's up
Mhm.
0.9%. It's a broad rally, I guess on NAFTA optimism, and just some other news over the weekend. What are your thoughts here?
My thoughts is that this is a big historic turning point, and you got to pat Donald Trump on the back. A lot of people were saying that when Donald Trump tried to throw NAFTA out, that, oh my gosh, you can't do that. You're going to offend our neighbors. You're just going to start a trade war, and oh my gosh, you'll never get the band back together again. And despite some tough negotiations, Donald Trump, got his way, and right now it's not even called NAFTA anymore. We're NAFTA 2.0, or now it's called the U.S. Mexico Canada Agreement, or USMCA. Uh, Definitely a win for the Trump administration and a win for the markets. We just talked about the ISM manufacturing number here in the U.S. It continues to be strong. And even though it missed expectations a little bit, it really plays into Donald Trump's mantra that we can bring back some manufacturing to this country and higher wages. A lot of people in the other party said, hey, that could not be done. It's not going to get done. I'm sorry. Manufacturing's a dead issue. You'll never bring it back. We're proving that that's not the case. Now, labor unions, I think, have got to love this, right? Because one of the things they've been complaining about for years is that all their jobs are going off to Mexico. They're getting undercut with wages and hourly earnings. This NAFTA agreement, of course, or the new NAFTA 2.0, allows some of those jobs to stay here and be required to pay those higher wages. So not only is it a win for union workers here in the United States, but also in the countries that compete with us, and it levels the playing field. So I'm pretty excited about it, and I think the stock market is as well.
Is there any specific commodities that are moving more or less based off of this deal? Basically, being it's not finalized, but it's
Yeah.
a deal has been made.
I think I want to look at the dairy cows, the milk, because that was one of the biggest bugaboos when it came to this market. The Canadian dollar obviously really exploded on this news this morning, and so that market looks like it's going to be very good. But I think it's also supportive, obviously, for the energy market. The energy market, was already on fire going into this announcement. It's probably being held back a little bit on this news because of the fact that Donald Trump called the Saudi king over the weekend, to try to talk about replacing the Saudi oil. But at the end of the day, this is supportive for a lot of markets. I think silver this morning, let me take a look at our silver. I think that was supported. The copper market initially saw some strength in this situation. So what we've been in a situation here right now where we think this is going to be overall good for the commodity sector, should be good for grain, should be good for everything. We're not getting that initial, surge necessarily, but it definitely opens the door for better commodity markets and prices going forward.
Yeah, I see corn's up 6.5, wheat is flat, and soy's up 12. So those are, corn definitely a decent mover there, and corn showing some support around this 350 level, and so it's been trading pretty well the past few weeks. We actually speak with Brent Donnelly of HSBC. He put out something before looking to sell, basically saying there's going to be positive CAD. He's looking to sell any dollar CAD rallies. He's also pointing out that in Canada over the short term, the factors coming into affecting CAD is Bank of Canada rate hike in coming up in about October 24th is now pretty much priced at 100%. The new NAFTA deal should lead to minimal economic or supply chain disruption. That's also positive. Dollar CAD is now below the 200-day moving average. And it's some new infrastructure projects coming out online in Canada that should help both Canada and the United States. So it seems like also it looks like on Thursday the price action of Canada started to trade firmer and equity markets traded well as well. So maybe there was some leaked information that things were going to progress over the weekend.
Yeah, the Canadian dollar from a seasonal viewpoint usually does pretty well. And I think because we've had the higher cost of oil going up as well, definitely was supportive. And this is like icing on the cake. It really is.
Yeah.
And you gotta give them credit. They said it couldn't get done, and they went ahead and did it and got a better deal. And maybe it wasn't pretty, but it got done a lot faster than it would have got done any other way.
Yeah, and as we speak, I know you've been bullish crude oil as well, and crude is made a new high a few minutes ago. Right now, it's 73.75, which is up about 50 cents, 45 cents on the day. So that continues to move higher, and equity markets as well. S&P is at 29.40. So it's definitely a gangbuster start to the quarter for U.S. equities, up higher, in oil trading at highest levels we've seen in many years.
It is, and it goes back to what I've been saying for the last couple of years, is that oil's in a new super cycle. It really is. And when we go back to 2014 and 15, and everybody was telling us that oil was going to be low forever, we saw a significant cutback in spending, and now we're seeing the results of that. I mean, a couple of years ago, we were talking about an oil glut that would never go away. And oh my gosh, but that was really short-sighted thinking and not really looking at the history of the oil market and the way it's been in the past. And, low prices cure low prices. It's the oldest commodity adage in the book. And that's what happened with oil. Prices were so low, we cut back on production, demand was ignited. Now, there's a lot of serious people out there saying that they think that oil prices could get to $100 this year, before it's all said and done. Some of the major banks are out there making those calls. Now, I don't personally think we're going to get that strong this year, but we are going to see a supply squeeze as we get towards the end of into the winter, towards the end of the year. New regulations on diesel, for example, are going to tighten the supplies of diesel as well. And I think that there's some significant concern about the ability of other countries to come in and step up, raise production, and absolutely come in and fill in that void from the Iranian sanctions. And even if they do, the big answer to the question is, what are they going to do next? I mean, I am seeing the reports of global spare production capacity. That's oil that people can bring on quickly in case of an emergency. And it's basically down to nothing. We're running on fumes. So that really sets the stage for the solid fundamental. And then you look at that manufacturing data today, very strong number. And as long as that number continues to be strong, industrial demand for that commodity is going to be strong. So that improves the demand expectations for that oil. So very, very perfect scenario. And that's why, Brent's pushing towards a 4-year high. And of course, WTI trying to break out and get into those same type of levels here, maybe later this week.
Yeah, well, I was about to say, so here we are on Monday. What are you thinking for the week? What are the key moves? I know we have a lot of economic data. We got non-farm payrolls among some other key U.S. data. We have API on Tuesday, DOE, crude oil on Wednesday. But what are the key things you're looking at for all the markets here?
And I think from a technical viewpoint, we're looking to see if oil can get back above $75 a barrel or test that area. That seems to be the next psychological number for this market to really test. And I think inventories are going to be key, API and DOE, because we expect to see those supplies fall again this week for crude. And what's amazing is we expect them to fall even as refiners are probably going to go deeper in maintenance. We're seeing a record amount of exports for U.S. crude. We're seeing strong global demand, and we're seeing incentive to send oil to Europe because there's such a big spread between U.S. prices and global prices that we're going to keep those numbers moving. So I think you have to focus on that. The other number backward looking that we looked at was the rig count last week. And it's kind of funny. I remember nobody used to look at the rig count. I thought I was a geek, the only guy that looked at rig counts, 5-6 years ago. And I was, and now everybody's looking at the rig count. It's big news. But the rig count for oil actually fell last week, which shows signs that even at these higher prices, the shale producers are having trouble bringing stuff back online. Now, we do know that there's been some labor shortages down in the Permian Basin. We know that the price per person is going up. Equipment, pipeline shortages in the Permian Basin, that's going to restrict that oil flow. We do have Pioneer rushing a pipeline to get it on before the sanctions begin, which should add a little bit more oil to the market. But fracking sand shortages are starting to appear. Prices of that are going back up again. So it's going to be more expensive for the shale oil producers to bring on more production. So it's not going to get cheaper. It's going to get more expensive. It's going to talk more commitment and more prices. And the problem is a lot of shale producers are still not making money even at these levels. And I'm afraid that the cost squeeze for a lot of these producers is going to make it even more difficult for them to get production online. So, we're kind of seeing a situation where the shale oil production surge that we saw the last couple of weeks is going to start to level off here. And that's a real shame.
Yeah, pretty interesting levels, pretty interesting time right now. Anything else in terms of currencies or yields that is kind of catching your eye?
I think the Canadian dollar really is going to continue to roar seasonally, technically, fundamentally. This is going to be a big one. And so I think this is just the beginning of a move on the Canadian. So that's going to, the U.S. Currency was the strongest one in the world. Canada is going to be number 2. We're going to start seeing that go. The Mexican peso, it's back, baby. Huh? I remember, what was the margin of Mexico peso? Like 16,000 a contract, something like that back in the day. But the Mexican peso also is another currency. So the North American currencies right now are going to continue to be strong. And because the Mexican peso and the Canadian dollar were behind the US dollar, they should look to continue to gain. So I really like those. As far as the yields, you mentioned, and the price just paid number was pretty muted in the manufacturing data. Obviously, that's given the yields a bit of a breather because, if inflation isn't that hot for the manufacturers as they thought, guess what? Maybe the Fed doesn't have to be as aggressive on rate increases. Very day-to-day micro stuff. But, I think you got to look at the overall historical impact of this NAFTA 2.0 or U.S.-Mexican trade agreement, whatever the heck you want to call it now. It definitely is a new era in trade. And it's, we had the old NAFTA deal that, became outdated. This deal should be a lot more updated, and it should really allow the economies in the United States, as well as Canada and Mexico, to improve.
Yeah, well, it's got a positive reaction right now, and it's interesting. I pulled up the dollar MEX chart, like you were saying, because it was about start here on August 27th that they made this deal, the initial deal, Mexico and the U.S., and dollar MEX traded down to similar levels to where we are right now at about 1860 or so, and then had a sharp rebound back up to 1975 over the coming days, and so we're now just getting back to those levels. And, we're seeing positive reaction on all those as of right now.
I think that's, that amazing power that we're getting that trade block back together solid. Actually, again, will put more pressure on China, to come to the table. because if North America starts to trade like nothing's happened, we're getting into a much better trade relationship again with Europe. China's going to be the odd man out. So
Yeah, well,
this
as you say that, we actually have a headline from the White House about 5 minutes ago that I posted that said White House economic advisor Kudlow says a trade deal with China is not imminent, but President Trump and Chinese President Xi may meet at the G20 summit. So the headline is that they may meet at the G20 summit. That said, I continue to think that China probably is going to pressure the U.S. With holding over them the midterm elections. Basically, if they want to get something done, it's going to have to be a favorable China deal. If not, they're not going to do anything before the midterms.
Right. Well, the thought process is that China likes to wait stuff out, and China plays the long game, and they can wait for decades or 30 years or whatever the case is. But I really think in the reality of the situation, the way that the world is moving away towards new deals with the United States, I think it definitely increases the odds that they get something done. So this talking between Trump and Xi at the G20 is something that we're definitely going to have to watch for a possible deal.
Yeah, well, absolutely. That still continues to be big on traders' minds. What's going to happen with China? Because when you look at the dollar amount, that's global economy right there.
Absolutely. Yeah. So it's going to be a big day, big day, big day. All my hedgers out there, I'm getting a lot of love mail from you. I love you farmers out there. They're all glad they got hedged early. And, now I'm getting a number. Hey, thanks so much. What about spring? And I think the way things are going with oil, yes, you should start to look to do your spring hedging as well, because if we're right on target with the oil, this year we're looking for 84, next year 94. Obviously, next spring, you're going to be dealing with an oil price that's about $10 a barrel higher than you are today. That's going to definitely add to the cost of both your diesel fuels and your gasoline. So if you're not hedged, look for breaks to start lightly hedging and get it probably fully hedged before we get into winter.
Yeah. All right. Well, thanks a lot. That's Phil Flynn of the Price Group and Fox Business Contributor. I really appreciate the insight on Monday morning. We'll speak to you a little later in the week.
Appreciate it.
All right.
Bye-bye.
Talk to you later.